Welcome back to the Macro Market Report, your weekly summary of expert insights from top analysts and strategists across the financial world. This week's report spans all major asset classes, from stocks and bonds to gold, silver, oil, and Bitcoin. Let's dive into what the experts are saying about where the markets are heading next. We start with equities. Brent Johnson says the markets are currently in overbought territory. According to Johnson, this is not an ideal time to enter the markets, even though there may still be room for them to run higher. He notes that global markets are also nearing all-time highs and are equally overstretched. Further evidence of this overconfidence can be seen in the put-call ratio, which recently hit its lowest level in over a year. The sentiment index is also at elevated levels, suggesting that investor euphoria has taken over. Johnson believes that the old adage, sell in May and go away, might be applicable this year. Larry Berman echoes a similar tone. He's remaining cautious and emphasizes that uncertainty remains high. Inflation expectations are increasing, and with Walmart announcing price hikes due to tariffs, Berman warns that markets are becoming irrational. He believes the QQQs could go another 5% higher to previous highs, around the 540 level, but recommends staying defensive and cautious until the end of the current business cycle. Patrick Ceresna also urges caution, noting that only short-term traders should consider riding this rally higher. He sees a potential consolidation into the summer, possibly forming a double top before a reversal. Gareth Soloway agrees, predicting a pullback of 5 to 10% as the market hits resistance. Christopher Moland says this is typical late-stage behavior, with retail traders piling into tech stocks while institutions are selling into the rally. He still expects a significant correction, possibly over 50%, and warns that even gold could fall if markets sell off and the U.S. dollar rallies. Vermeulen believes we're nearing the end of a dead cat bounce and that sideways movement could eventually turn into a rollover. Lynn Alden provides a macroeconomic perspective, arguing that the dollar's current strength perpetuates economic imbalances. The U.S. is increasingly reliant on foreign investment to fund deficits. This dynamic, she says, limits the Fed's ability to control inflation. Alden is skeptical about Trump's tariff policies, warning that they hurt domestic industries and consumers while failing to address deeper issues. Keith Richards joined the chorus of caution, stating that it's still too early to get bullish and that a reversal remains a real possibility. On the metals front, Jordan Roy Byrne says that gold and silver miners are in a corrective phase. He sees strong support around the $3,000 level for gold and around $28 for silver. He believes the long-term outlook remains strong and the current pullback may present another opportunity to build positions. Ceresna concurs that gold is at a critical juncture. Will it turn bullish again after the dip, or will it continue to correct for another few months? It could drop to $2,900 or $3,000 and consolidate for a while, but that would offer a new buying opportunity. Likewise, Soloway expects gold to consolidate in the $3,100 to $3,400 range before eventually breaking out. Meanwhile, Francis Hunt remains bullish on gold long-term, predicting a major upside as global currencies continue to be devalued. Vermeulen is less optimistic in the short term. He has exited his gold positions and expects a deeper correction of over 30%, potentially down to the 2,300 to 2,600 range. He notes that defensive sectors like utilities and consumer staples are now catching inflows, possibly from investors rotating out of gold. Paul Beatty on Michael Campbell's Money Talks podcast is still bullish on large gold producers and sees this as an area of strength, and points out that many countries and institutions are increasing their exposure to crypto as well. On the cryptocurrency front, Soloway believes Bitcoin is favoring the bullish side and sees a target around $109,000. Chris Vermeulen also expects Bitcoin to push higher in the short term, but says he's locked in gains from the recent rally. If the general market pulls back, Bitcoin could also form a triple top and collapse. Eric Townsend and Patrick Ceresna think Bitcoin could rocket higher, potentially up to $135,000 if markets remain stable. Tony Greer on the Macro Dirt podcast also says he's long crypto again, expecting a move to previous highs. His guest, Raoul Pal, is similarly optimistic, saying we could see a rally continue for the rest of the year. He highlights that sovereign wealth funds and pension funds are entering the crypto space, especially since the Trump administration is now supporting Bitcoin. Turning to oil, Townsend and Suresna say the rally appears to be stalling. But if oil can break above its 50-day moving average, it could turn bullish. Soloway sees strong resistance around the $65 level. On the energy equities side, Eric Nuttall believes natural gas stocks will outperform oil stocks in the near term, but remains positive on the energy sector overall. However, he says Canada won't become an energy superpower like Prime Minister Carney promises, unless existing government legislation around oil and gas infrastructure changes. They must build pipelines and expand infrastructure to make that promise a reality. And now, to bonds and interest rates. Soloway believes the 10-year Treasury yield will likely be lower in 6 to 12 months, potentially around the 3% range. He also expects the Fed to cut rates. Vermeulen says money is moving out of TLT with a downside target around 81. Brent Joyce on the In the Money podcast is increasing his exposure to government bonds and expects the Fed to cut later this year. On David Lynn's podcast, Michael Lee predicts the Fed will lower rates and that the S&P will continue to push higher. David Rosenberg takes a more urgent tone, pointing out that the labor market is beginning to crack. He says it's not the level of unemployment, but the speed at which it changes that signals trouble. According to him, economic data in the second half of the year will surprise many and likely lead to a recession. Rosenberg expects the Fed to scramble to cut rates once the market drops again. He believes the Treasury market will rally and continue higher over the next year. He advises holding cash, treasuries, gold, and low-beta dividend stocks in defensive sectors like utilities, telecom, and aerospace. On currencies, Soloway expects the U.S. dollar to pull back to around 97. Lynn Alden says the dollar's current strength is unsustainable and contributes to global imbalances. David Wu warns that the U.S.-China trade war is far from over, and any escalation in Ukraine will hurt European assets and the euro. He says Iran is unlikely to give up its uranium enrichment capabilities, all of which should be bullish for gold. Jeff Snyder sheds light on China, saying their banks are cutting back lending and the country is experiencing a silent depression masked by continuous Keynesian stimulus. He says this debt-fueled growth model is collapsing under its own weight, rooted in ghost cities and failed real estate investments dating back to the 2008 crisis. To summarize, markets are stretched, sentiment is euphoric, and caution is the dominant theme among experts. While some sectors like crypto and AI infrastructure may still rally in the short term, many analysts are warning that we're approaching a major inflection point. Gold and silver are consolidating, Bitcoin is still favored short term, but risk-off sentiment is rising, especially as volatility declines and investors pile into defensive sectors. Whether you're bullish, bearish, or somewhere in between, now is the time to stay informed, be selective, and remain prepared for whatever the markets throw at us next. Thanks for watching the Macro Market Report. Don't forget to like, subscribe, and hit the bell to stay updated on next week's breakdown.